In this week's episode of the Stockscores Market Minutes, I'm going to show you how to predict the next trend in the market using what has happened already. I'll also do my regular weekly market analysis, give us a sense of where the market is likely to go. I will do a market scan in search of opportunities and look at the day trade of the week on Sorrento SRNE. So there's been lots of volatility in the stock market over the last little while, and that overall market volatility will, of course, pull stocks up or down with it. And that makes it more important than ever to be able to predict the short-term trends of the market. Now, it's actually quite simple if you can understand three important concepts: inflection points, trend lines, and support and resistance zones. So I'm going to show you with some charts how we do that with the overall market, and you'll start to see that you can actually predict where the market is going to go using those simple things. Now, it's very important when you are trading in this environment to not succumb to emotion. There are big swings up and down, and it's very easy to feel greed when the market's been going up for a couple of days, or fear when the market has been going down sharply for a couple of days. The problem is, because the market is very volatile, if you jump onto that fear trade or onto that greed trade, you may be getting in late just before the trend is about to turn. So we want to keep it simple, focusing on inflection points, trend lines, support and resistance. And I always like to apply this to the chart of the S&P 500, symbol SPY. So we start off with inflection points. Now, an inflection point is any peak or valley on the chart. You can see lots of them here. I'm not going to mark them all on here, but there's lots, and there's little peaks and there's little valleys, and we call those inflection points. So that's pretty easy. The next thing you're going to do is draw a line across them. So you draw a line across inflection points that are rising from left to right. You have an upward trend line. Falling from left to right, you have a downward trend line. What we like to look for are breaks of trend from either rising bottoms, rising inflection points, or falling tops, falling inflection points. So if we think about this past week, we had a little inflection point here and another one there, but notice that this was higher than this one. So that's a falling top. Then we had a breakdown of the upward trend line from a falling top, and that predicted the downward move. We then had a downward trend line, which we broke from a rising bottom on Thursday, and that started the upward move that is now roughly a day and a half in. And so keeping these simple concepts in mind will help you to trade with the trend. It's so important right now more than ever because of the extreme market volatility. Now we can apply those same concepts to an even shorter term chart. This is the chart of the S&P 500 on the 2-minute time frame. Because the other concept we want to keep in mind is that when price falls into support, it usually bounces. So what is support? Well, look for an inflection point low, draw a horizontal line, and notice when price fell into that, it bottomed there. It then rallied into this inflection point high and got stuck there. So when markets rally into resistance, they get stuck. When they fall into support, they get stuck. And so those are often areas of reversal. Now one more here. Here's a bottom, an inflection point low, a little bit higher one. That is a rising bottom. I can draw a trend line across those inflection point tops and see that that was broken from a rising bottom, and look what happened. The market went up for the rest of the day on Friday. All right, let's get into our regular weekly market analysis looking at the US markets, and this is the 30-day 60-minute chart of the S&P 500, and you can see that we have been essentially locked in a sideways trading range for a number of weeks. That after the big bounce back. So this is a base building process. The market's trying to decide, does it want to go higher or does it want to go lower? And we've got gyrations inside of that sideways trading range, but if we use our inflection point tops, We have resistance right here, just under 295, and we have support down around here, around 275. You can see it hits it or close to it a number of times. If we can break out through the 295 level, we should go higher. If we break down through the 275 level, we should go lower. Until then, this market's just going to gyrate sideways with some swings up and down that may last 2, 3, 4 days. That's what you want to keep an eye out for, though, is a break through 275, which would be negative, or a break up through 295, which would be positive. Looking at the longer term weekly chart, you can see the dramatic sell-off that came on a break of the upward trend line. We fell into support. We actually went through it during the week, but never really closed below it, just only slightly. We bounced off of support. Remember that rule, when we fall into support, we usually bounce at support, just like it did back there. And now we've made back basically half of the loss. Those are using something called Fibonacci ratios. When you come back half, that is a Fibonacci number. And we are now basically going sideways for the last 4 weeks or so until we can break out through 295. I think we're destined to go sideways or break down through 275. Those are the key levels to watch. Looking at the small cap sector, this is a daily chart now. And notice I can draw a trend line across the bottoms. We had a falling top and we broke down through that on Wednesday. So that's a negative for the small caps. Now it bounced back Thursday and Friday, but I still think some caution is warranted with the small cap stocks because of this breakdown from a falling top. Now the only way that that gets overcome is if we can break up through this 135 level, then this negative breakdown will have been negated. For now, be cautious with the small cap US stocks. Looking at the Canadian markets, and this is the 30-day, 60-minute chart again, you can see a sell-off into this area of support, bounced off of it, but we have not gotten out of the woods yet because we are stuck inside this trading range where we're just bouncing around in it. We may get up to this level and get stuck. We may roll down to this floor and get stuck. But until we can break through one or the other, I would say it's a sideways neutral market. Longer term chart, very similar to the S&P, but notice that this week we came close to hitting a new high. We closed below the open. That's why that candle is red. It closed below the open. And that is a signal that we may roll over here and move lower. So another sign of caution here is warranted. On the small cap sector, the TSX Venture making a great comeback, a nice steady upward trend until that trend line is broken. I would remain optimistic in the short term, recognizing that we are slowly getting towards this resistance level where we may get stuck. On to currencies, and here we have the US dollar, which had lots of volatility around the crash, and it's now normalized. We're basically going in a sideways range. US dollar looks relatively stable. Looking at the Canadian dollar, also relatively stable. You had the parabolic move to the downside, the break of that downward trend line from a rising bottom, and we've been stable ever since. Again, if we can break up through 71, that would be bullish. If we break down through 69 or even 69.5, that would be bearish. Interest rates. Here we have the Treasury bond ETF, the 20-year bond iShares. I like to use this as a proxy for interest rates. If this is going up, interest rates are going down. You can see that there is generally an upward trend with lots of volatility, and we're now kind of in that sideways range as well. Interest rates are low. No sign that they want to go any lower. No sign that they want to go any higher. We're just stuck in a sideways range right now, but I don't see higher rates in the horizon anytime soon. Commodities, gold managed to break out of a little 3 or 4 week sideways trading range. This is a weekly chart, and you can see that this past week we broke out to new closing highs on the 2-year, 3-year chart here, and that is a bullish signal for this to continue higher. Because we are well into the trend, I think you have to be a little bit picky about the gold stocks that you might buy, because many are already up a lot and therefore risky. But if you have positions in the gold names, I would stick with them. Now, oil is the really interesting chart because it has, of course, had a very sharp decline, and it recently broke the downward trend line, and it's now building the rising bottom that I talked about earlier. What we need is a strong break to the upside from this rising bottom as a signal that a recovery is starting in the oil market. It sort of started on Friday. I don't think it was a definitive break, and so I would remain somewhat cautious, but still, there's some cause for optimism that oil may finally start to bounce back. And finally, the fear chart. We look at the VXX to gauge investor fear. You can see we're still far above where we were, but also far below where we were when fear was at its highest back here. The trend in fear is down. You can see that we have falling tops and rising bottoms. And so I expect that the market's slowly normalizing. Now, if the market were to break down through support, remember 275 on the S&P, SPY, if we can break down through 275, I think this will start to go up. And this is a good instrument to trade if the market is selling off again. So my ratings then, neutral on both time frames for US and Canadian stocks. Gold, bullish long-term, neutral short-term. Oil, neutral on both time frames. Stocks are making short up and down moves in a volatile sideways trading range as investors try to figure out the next leg of the move. So what we want to do is buy pullbacks to support and sell rallies into resistance. Now, gold is up to new highs and it continues the upward momentum, but you got to recognize that it's getting risky at these levels. Oil is stabilizing and it may bounce back, but it really hasn't made that decisive break yet, and fear is coming down. All right, let's jump over to the Stockscores market scan now and do a scan in search of opportunity. This week, I'm going to run the Abnormal Breaks US scan. Now, this particular scan looks for stocks that are trading with abnormal price and abnormal volume activity. We know that those are the footprints of hot stocks, those stocks that are trading on some new information that have investors excited will often show this abnormal activity early in their upward trend. And what this market scan does is goes through every stock in the US or Canadian market and looks for those breaks from low volatility and with abnormal price and volume action. So I'm going to jump in here and run the scan, and it found 55 stocks. Now we won't go through all of them, but we'll go through some of the more active ones. I'm actually going to sort this by number of trades just so we put the more liquid stocks at the top of our list. So the first one was Sorrento, SRNE. We're going to talk about that as it was the day trade of the day on Friday. I'll come back to that one. Let's take a look at Aurora Cannabis. Many of the cannabis names starting to show some life, really been in downward trends for some time, and ACB made a big volume move to the upside on Friday. But notice that there is no rising bottom on that chart. We are in a downward trend line and we've broken that. I think it's early stage for the stock to turn around, but I don't think it's yet decisive. I expect that we may go up a little bit, pull back, make that rising bottom, and then if we start to break higher from a rising bottom, I'll get more interested in this name. Some of the other cannabis stocks have a little bit better charts, but I don't think ACB is quite ready yet. Silver showed a lot of strength across a number of silver names on Friday. For example, here you see First Majestic Silver AG trying to break out of this little sideways trading range. This is something we call an ascending triangle. See the volume picking up. Problem I see here is upside's relatively limited to resistance in between $11 and $12. So there's not considerable upside given the risk you have to take. You know, your support is down around 7, you're buying at 9, and the upside is 11. That's like a 1-to-1 risk-reward ratio. It's not ideal. I like that to be closer to 2-to-1. But we can continue looking through these, and as I look through them, I look for certain patterns. This pattern is something called a bottom fishing pattern, or at least that's what I call it. You can see the downward trend. We broke the downward trend. We've been building rising bottoms, and this Friday we broke out through resistance with abnormal volume, having broken the downward trend. I think the stock looks likely to move back up to the highs around $8 in the months to come, I think CDE is a name worth considering here. Let's keep on moving. We'll look through a few more and then we'll move on to the day trade of the week. GoPro, it's okay. I'll tell you what's good and what's bad about it. So what's good is that it's building rising bottoms. And I think if you own this stock, you would want to hold it. What I don't like is it's a little bit late because it first made its break from a rising bottom back there at about $3. Well, now we're pushing $4. We're already up 33% on this name in the past 2 months. Not even 2 months, 6 or 7 weeks. And so I think it's a little late. You know, it had a good day on Friday, but it's coming into this area of resistance where I expect it will get stuck. I think short term, it probably does get up to that $4.50 range, but when it does, it will probably stall there, and I don't think that is ideal. So a good hold if you own it, but I wouldn't initiate a position here. All right, well, let's jump back into the presentation and we'll take a look at the day trade of the week. And this week it was a very hot stock, SRNE, Sorrento. It made a very strong abnormal move on Friday, and the economics of it were outstanding. So let's take a look at the chart and just talk about that. Again, the symbol SRNE, my action candle indicator picked it up right at 932, and it was one of the stocks that we traded on the Active Live service with Stockscores. Of course, Active Live is where you can watch my algorithms running all day looking for these stocks, really finding them before most people do. And in this case, I said, you know what, it's gapped up on the open because it jumped up pretty significantly on the open. So let's wait for a second signal. Now what I mean by second signal is I want it to pull back and then move back up through the action candle close, which in this case was $4.47. And so what I had suggested is that we put buy stops in at 447. And you can see that when it hit 447, we had a little spike there. So that was our entry point at, let's call it 448. And it took a little while. It went sideways for about an hour and a half, maybe a little less. And then it really started to gather momentum. And guess what it was? There was a downward trend line, and it broke the downward trend line from a rising bottom. That's the theme this week. And you see there the break, and then it just went parabolic to the upside. So that was really a great trade. If you look at the economics of it, because it was such a volatile stock, the position size was not very big. For every $100 of risk required, 370 shares in that position, which was $1,654 of capital. Because you can margin day trades 3-to-1, you would have to put up $552 of capital. The stock ended the day, right here, at an 8.5 RR gain. That's the measure of these lines here. That's what we call reward for risk, which means it made 8.5 times the risk, or $850 for every $100 risked. Well, given that we were risking or putting up $552 of capital, that was a 154% return on a one-day hold. Now, if you manage to get really lucky and sell it at the high, which of course we never do, but at that point it was actually up 16.7 times risk, which was a $1,670 gain or a 302% return for a single day. All right, well, that has been the Stockscores Market Minutes for May 18th, 2020. Hope that you've enjoyed it. If so, please give it the thumbs up, subscribe to the channel, click on the notifications bell, and most importantly, trade well.